Hey folks, it's Simon here with your Tao Daily update for market close Wednesday, the 27th of August 2025. Obviously, Nvidia is the topic of the moment. They did announce earnings after market, and the earnings honestly looked pretty good. Just to give you a quick recap of what happened there, EPS beat by 4%, adjusted EPS 4%, total revenues were 1% higher than expected. If there were any kind of disappointing aspects of the result, it was data center revenues were slightly weaker than expected, but still up 56% year on year. The other kind of, disappointment was China remains a challenge between Chinese customers being pushed to domestic alternatives by Beijing and Washington tightly limiting sales over the course of the year. Nvidia booked zero sales of its H20 China-specific chip in the second quarter, and they've assumed no further shipments of that chip to China going forward in their guidance. Overall guidance for Q3 was 1% above consensus, and despite all of that, the stock was down 3% after market. So a lot of people will want to know why. Why would Nvidia fall after beating revenue and earnings estimates? A couple of things you can point to here. One, if we look at the put-call ratio, we are definitely in territory where we know that kind of everybody's long. All right, when everybody's long the market, it can run out of marginal buyers. Now, if everybody is long the S&P 500, you can sort of draw a conclusion that everybody's also long Nvidia, because Nvidia is the largest stock in the S&P 500. All right, $4.4 trillion market cap. So we just may have run out of marginal buyers. Where's the new marginal buyer going to come from after a marginal earnings beat? Secondly, it's potentially becoming a victim of its own success. What do I mean by that? Well, it sort of comes back to valuation, right? You consider a stock that's trading at 10 times earnings. That means 10% of its market cap is coming from earnings. All right. So if its earnings double, the stock would, in theory, rise by 10% with no need for a higher PE expansion. Now, you contrast that with a stock that's trading at a 50 times PE. Only 2% of the weight in determining what's going on with the total price comes from earnings. So if the earnings double, the stock's only going to go up by 2%. And doubling earnings when your earnings are in excess of $70 billion is probably not that easy, right? PEs get to such lofty levels, continued PE expansion becomes mandatory to deliver further share price gains. Now consider that Nvidia's PE is currently around 58 times. It just means that the bar for continued stock price appreciation is already pretty high. So it doesn't look like Nvidia has run out of scope to grow its revenue and grow its earnings, far from it, but maybe its scope to keep growing its share price from these levels is diminished, and maybe it's due for a pause. I don't want to imply that I'm bearish on Nvidia here, but I think gains like this are going to be a tough ask from these levels. That's what I got for you today, folks. I hope it helps, and I will catch you next time. Thanks for tuning in.